Good morning everybody and welcome to this Smart Charts European session on Monday the 30th of September. Hope you are all well, ready for another fantastic week of trading the financial markets. Really the start of a new month really. September has been a fantastic month. We started off with a really lot of activity in that first week. Flows subdued a little bit towards the middle of September as we approach those high impact news announcements, decisions from central banks that they haven't made for many years. So volatility picked up very nicely towards the end of September and we saw the month out in a fantastic way with some really good rallies in the stock market and really good reversal opportunities in the currency market as well. So let's see what is on the calendar for the week ahead and highlights a few trading opportunities from the London and Sydney trading floors. Okay, so first of all, we've already had some high impact news announcements come out from China and a manufacturing PMI report. And the PMI stands for Purchasing Managers Index. And it's basically an index of a survey of the number of participants, purchasing managers within a manufacturing industry, and it's a leading indicator of economic health because of course purchasing managers are on the forefront of economic conditions and have good understanding of the level of economic activity. And we actually saw a rise in the manufacturing PMI report, which was much better than expected, than analysts were expecting. And we know actually the Chinese stock market has been very interesting because of the intervention from the People's Bank of China last week, all these stimulus measures to stimulate their economy and housing industry. And that has led to a huge surge in the Chinese stock market. We've been in particular been looking at the Hang Seng 50, the Hong Kong Stock Exchange, which is a tradable exchange, and we've had a really good rally in there. So we'll be looking for continuation in the Hang Seng stock market index and other Chinese related markets as well. So it's one to keep an eye out on. And of course, what happens in China, because there's obviously such a big economy, does have a big effect on other markets as well. So we've had a really good rally in commodity currencies because when China was growing, they need commodities. So things like the Australian dollar do very well as they have some of the world's largest copper mines. So we've actually seen a nice rally in the Aussie in the overnight session as well in Asia. So we'll keep an eye on these themes that are developing from these China's stimulus plans. Now, really for the week ahead, kicks off on Tuesday with the Eurozone inflation report. And inflation basically measures the change in price of goods and services within an economy. And generally speaking, inflation is very important because it determines the interest rate policy set by central banks. So when inflation is increasing and prices are getting more expensive in an economy, this is where central banks tend to increase interest rates to get people to spend less in the economy and just get prices coming down a little bit. When inflation is falling, central banks tend to cut interest rates to get people to actually spend a little bit more money in the economy and get economic activity picking up. So it's a bit of a balancing act, okay? Now, we already know the European Central Bank has cut interest rates, but the question is, when is the next one going to be? And is it going to be bigger than expected? Because we've had the Federal Reserve middle of September. Why did they expect they were going to cut interest rates? They did, but they did it at a much bigger amount than the market was expecting, 50 basis point cut rather than a 25 basis point cut. And this is obviously why the US dollar has been very weak for several months and has continued that weakness within September as well. So all eyes really on the euro. Let's see if any inflation figures are going to affect the decisions of the central banks, and then maybe we get some flows in or out of the euro. And remember, we're not trying to guess what the news announcement is going to be. We're not trying to react instantly and compete with the algorithmic traders, taking trades in nanoseconds, readjusting portfolios on news announcements. What we are looking for is any surprise, right? Because everything's already priced into the market. What we are looking for are any surprises, any big surprises that will cause people to readjust their portfolios and cause a lot of volatility. And we're not trading initial volatility. Sometimes you can, but sometimes it's all just a bit fast and a bit wild and choppy. But if there's any follow through, that's really the key. Is there any follow through from that news announcement? Because that's where we get some really good trends developing. All right. So obviously we'll keep an eye on those. And it's really a big deal for the US dollar this week. That's really where the focus is. On Tuesday, we've got the US JOLTS job openings, which basically just shows you how many job openings have appeared in the US economy over the prior month. We have the US ADP non-farm employment change. So this is basically an early indicator of employment figures in the US. We've got the unemployment claims report on Thursday. We have Friday's US non-farm payroll report, the unemployment data. It's a really big deal for the US dollar. Lots of high impact news announcements coming out this week, and in particular focused on employment figures within the US, which is a very, very big deal, because if you recall, the reason the Federal Reserve cut interest rates much larger than expected was because they were a little bit fearful of a slowdown in the jobs economy. That becomes very interesting to see if there's a bit of a trend in the data of employment, okay? And if employment isn't picking up in the economy, it's not a good sign, all right? And then we'll probably start to see more headlines on the fear of a recession and all these kind of things popping in, and we might get a further fall in the US dollar, as maybe people then start thinking, well, the Fed are going to have to cut interest rates even more to stave off a potential economic downturn. Now, of course, the US dollar, we know over the past several months, beautiful downtrend in the US dollar. We've had Euro dollar, Pound dollar, Aussie dollar, Kiwi dollar, Gold US dollar, all rallying higher. We've had dollar Swiss, dollar CAD, dollar yen, all pushing lower. Been fantastic. The weaker dollar has sent US stock markets trading towards record highs as well, because obviously a weaker US dollar makes it much cheaper for all the international investors around the world to put their money into the US economy, which helps to inflate stock prices and a myriad of other reasons, right? So it's been a fantastic time. A lot of the trends that have developed over the past several months have really been based on this one big theme regarding what's happening with US interest rates. But we also know that a lot of the US dollar currencies, the major currency pairs, a lot of them have come into major areas of resistance, a bit overextended, and actually last week we were playing it on both sides. We were looking for intraday on the fast time frames, continuing the trend of the US dollar weakness, but then we were also looking for potential signs of reversals, and we had some really good vol reversal trades on the intraday charts on Euro US dollar, Aussie US dollar, which worked out very nicely as well. We've had some good trend reversals in dollar yen with the 3-to-1 reward to risk power pivot trade, which actually covered the losing trade that we had before in dollar yen. We were looking for the trend to continue in phase one. So really a lot of last week's activity was around the US dollar, and it was a really good week and helped us to actually end the month in the positive. But now we're getting into these higher impact news announcements, so let's see how the flows develop this week. I will try to keep you updated of any potential trading opportunities around these key economic events or key themes that are developing, but make sure that you are also tuning into all the live daily trading webinars every single day, so you too can also interact, participate in the trading opportunities being highlighted by the traders in the live trading rooms. For now, let's dive into Smart Charts. Let's see what's going on. Okay, so here we are in Smart Charts under the Tools tab, and we can just get a broad picture perspective of what's going on. We can see, relative strength in the commodity currency pairs, Aussie and Kiwi, because of the Chinese economic data that came in overnight. A bit of weakness there in like the US dollar, and maybe a bit of profit taking in some of the US dollar economic and news announcements that we have coming up in the week ahead. So if you're intraday traders, you really want to be pairing up the stronger currency pairs against the weaker currency pairs, right? Now, obviously, bigger picture traders, then we want to be focused on price action, and then of course, once we start to get some daily moves on, then if we get the continuation of the trend, we can confirm that by the currency strength index, and then we can start scaling into lower time frames as well and participate in those moves, right? Because remember, we don't get a lot of moves in the financial markets because speculators aren't doing everything all the time, everywhere. So really we want to focus on, well, what are they buying or selling right now? Where is all that money flowing into and out of? That's the key, and those are the trends that we want to capitalize on. And that's probably why, if you look at some of these webinars that we go through, a lot of our trading opportunities tend to be concentrated on, a few currency pairs at a time or a few markets at a time, because that's where the theme is, right? That's where everyone is sort of piling all their capital. And you'll probably find that when you review your own trading performance and review your back testing or your forward testing, or however you're doing your review, you will start to see that as well. All right. Now, in terms of potential trading opportunities highlighted by the London and Sydney trading floors, a couple of things going on here. If I just go to the charts tab here, and if we go to the daily chart phase changes, so we have pound against the Swiss franc here, which looks quite interesting. On top of what Smart Charts is finding, and if you're not too sure how Smart Charts, algorithmic technology, AI technology can support you in your trading, then of course make sure you're attending your 3-day Learn Forex workshop. Make sure you're reviewing all the materials in the e-learning portal section of Smart Charts. You're attending on the live events tab, or your coaching, all the workshops, events, boot camps, coaching sessions available to you guys inside the Smart Charts platform. Make sure you're attending all of those things to make sure you've got the right trading plans, you've got the right systems according to the goals you want to achieve, and you understand what you need to be doing and what you're looking for, so you have a very high level of clarity. All right. But on top of what Smart Charts is looking for, what we have here on pound Swiss is we have this breakout of this trading range, don't we? So price was just hovering a bit sideways there, but price actually has broken through here, and we've got this pullback into the moving average zone. So we know throughout September with some really good trades in the moving average zone. So really we're looking for price to sort of continue here and see if buyers can actually continue a trend here. It's broken outside of a trading range, so we're looking to see if a trend can continue. And what is interesting is that maybe we're moving back into this longer term range. So if you recall, we had this really long-term range here that had developed. Okay, nice trend to the upside before it all went a bit sideways. We can see that price tried to break down outside of it, never really got to the low point, and now we've sort of creeped our way back inside of this. Okay, so there is a chance that maybe we could start to work our way to the top, and historically you might see this then as a false breakout pattern. All right, where price broke out the range, tried to trend, but didn't really, well, it trended on the intraday chart with a big sell-off for a few days, but it rallied all the way back up, moved sideways. So really looking for a failure of sellers taking control of the market and buyers turning up in the bigger picture here. And then really want to see if we can get a nice little trend like this developing here with some good cycles developing against a moving average zone. So let's see if we do get this unfolding here. So we're in the moving average zone, and we've got the false breakout from the big picture here, and looking for something like this to develop. And this fits into the narrative as well with the forecasts from different investment banks. Goldman Sachs in particular have been bullish on pound Swiss because of the interest rate differential. Bank of England forecasted just to have one interest rate cut later in the year, but will still have the highest interest rate of most G7 nations. Whereas the Swiss National Bank, we learned last week, actually cut their interest rates to 1%. All right, so this could lead to more upside in pound Swiss. We'll keep an eye on this. And not only does Smart Charts help you to highlight potential trading opportunities, and really what you want to do is get the combination of algorithmic technology, AI technology supporting you in your decisions, but then using that with a bit of human insight, human pattern recognition. It's the combination of those leading and lagging tools which becomes very powerful. But it also helps you do the risk management work, which is by far the most important part of trading the financial markets. Because if we click the buy icon here, Smart Charts will populate an entry price at the blue dot, stop loss at the red dot, target at the green dots. These can all be adjusted according to your own user preferences, of course. It'll do the risk management calculations for you automatically. Important to keep the risk low. Make sure you're able to deal the random distributions of wins and losses that develop throughout the day, throughout the week, throughout the month. And then we can set expiries. I like to set a current bar close expiry and then decline or accept the trade here at the bottom. All right. Okay, so that's just one potential trading opportunity. There's many trading opportunities developing throughout today so far in the European session, and undoubtedly throughout the day as well, because last week we had very high volatility, and you can already see that a lot of daily bars will be a bit bigger because the volatility is quite high. So that means there's good opportunities there on the intraday charts. So make sure you're tuning into all the live training webinars every single day, so you can also participate in those opportunities as well, ask questions as well to the live traders on anything that you're looking at as well. But in the meantime, that's it from me. All the best for your trading. I'll see you next time.